Have you ever bought a stock only to watch it collapse moments later? Then, after finally giving up and selling, you watch it soar higher than ever before. At some point, almost every investor experiences this feeling, the feeling that someone else always seems to know more. The feeling that the market moves against you with almost perfect timing. For years, people blamed bad luck. Some blamed the media, others blamed Wall Street. But what if the real answer is far more unsettling? What if the moment you click the buy button, you're entering a battlefield where your opponents are not human? Imagine walking into a chess tournament. You spend hours thinking about your next move. Your opponent spends a fraction of a second, not because they are a genius, not because they have insider information, but because they are a machine. And not just one machine, millions of them. While you're reading headlines over breakfast, algorithms are already analyzing those headlines. While you're watching a financial expert explain what happened, algorithms have already reacted. And while you're deciding whether to buy or sell, a hidden war is taking place at speeds the human mind simply cannot comprehend. Most people still imagine financial markets as a world controlled by traders in expensive suits sitting behind giant desks. That image isn't entirely wrong, but it is incomplete. Because today, some of the most important decisions in global finance are no longer made by people. They are made by code. The evidence has been hiding in plain sight for years. On May 6, 2010, something extraordinary happened. Within minutes, nearly $1 trillion in market value disappeared. Stocks plunged, investors panicked, financial networks struggled to explain what was happening. Then, almost as suddenly as it began, the market recovered. The event became known as the flash crash. But the most shocking part wasn't the money that vanished. It was the realization that humans were barely involved. Machines were reacting to machines, algorithms were fighting algorithms, and ordinary investors were simply caught in the middle. That day exposed a truth many people still don't fully understand. The modern financial market has evolved into an ecosystem dominated by speed, data, and artificial intelligence. And the deeper you look, the stranger the story becomes. Because hidden behind the scenes is a digital system so powerful that it helps manage assets worth trillions of dollars. A system capable of analyzing interest rates, inflation reports, corporate earnings, geopolitical conflicts, commodity prices, and countless other variables all at the same time. Its name is Aladdin. And for years, systems like this have given the world's largest financial institutions an advantage that ordinary investors could never hope to match. At first glance, this sounds hopeless. How can an individual investor compete with a machine connected to some of the most powerful financial organizations on Earth? How can a person sitting at home challenge systems that never sleep, never get emotional, and never hesitate? The answer begins with understanding a simple truth. The biggest weakness in financial markets is not technology, it's human psychology. Every market bubble, every panic sell-off, every financial crisis, they all reveal the same pattern. People become greedy when prices rise. People become fearful when prices fall. And in both cases, emotions overpower logic. Professional institutions have known this for decades. In fact, entire industries have been built around predicting human behavior. But something changed. The machines stopped focusing only on predicting people. They started predicting each other. And that is where the game truly changed. Imagine a world where a computer can read millions of social media posts, thousands of financial reports, and countless news articles every single day. Not in hours, not in minutes, but in seconds. This technology is known as natural language processing. To most people, a news headline is information. To an algorithm, it is an opportunity. The moment a central bank governor speaks, AI systems begin analyzing every word. The speed of speech, the tone of voice, the choice of language, even subtle changes in confidence. Before the average investor has finished reading the headline, automated systems may have already bought, sold, and moved billions of dollars. This creates an uncomfortable reality. The market many people believe they are trading in no longer exists. The real market moves first. The public discovers it later. But if that sounds unfair, the story gets even more surprising. Because speed isn't the most powerful weapon these institutions possess, Data is every click, every transaction, every earnings report, every economic announcement, every social media trend. The modern financial world generates an ocean of information every second, and the organizations capable of extracting meaning from that information gain an enormous advantage. For years, only major institutions had access to these capabilities. Today, that monopoly is beginning to crack. Artificial intelligence is no longer reserved for billion-dollar firms. Powerful tools are becoming available to ordinary investors. For the first time in history, individuals can use AI to monitor market sentiment, analyze trends, summarize complex reports, and identify patterns that would have taken teams of analysts days to uncover. The gap still exists, but it is shrinking, and that may be one of the most important financial shifts of the 21st century. Yet understanding the market isn't enough, because the market isn't always what it appears to be. Sometimes what you see is exactly what someone wants you to see. Large buy orders appear. Demand seems to be rising, prices begin to move, investors rush in, then suddenly those orders disappear. The demand was never real. The entire move was designed to create a reaction. This practice has become known as spoofing. And it reveals another uncomfortable truth. Not every market signal deserves your trust. This is where technology becomes your ally. Modern analytical platforms can reveal hidden patterns, identify unusual activity, and help investors distinguish genuine demand from market noise. The goal isn't to predict every move. The goal is to avoid being manipulated by them. And perhaps the most powerful application of all is something remarkably simple: testing ideas before risking real money. Most investors learn through expensive mistakes. They discover weaknesses only after losses occur. AI changes that equation. Instead of gambling on assumptions, strategies can be tested against years of historical data. Weak ideas are exposed immediately. Strong ideas survive. The result isn't certainty. Nothing in investing is certain, but it is a far more intelligent way to approach risk, because the future belongs to those who make decisions based on evidence rather than emotion. And that brings us to the most important question. What happens when artificial intelligence becomes available to everyone? What happens when every investor has access to tools that were once reserved for elite institutions? History offers a clue. Every major technological revolution creates new winners and new losers. The internet did, smartphones did, and artificial intelligence will do the same. The transformation has already begun. The battle is no longer between small investors and large investors. It is between those who adapt and those who refuse to. The institutions still possess enormous resources. They still command vast fleets. But for the first time, ordinary individuals have access to their own compass, their own radar, their own digital assistant. And that changes everything, because in the new financial world, success may depend less on how much money you have and more on how effectively you use information. The age of intuition is fading. The age of data has arrived. And the investors who understand this shift may find themselves on the right side of one of the biggest transformations in financial history. The question is no longer whether artificial intelligence will reshape investing. That has already happened. The real question is whether you will learn to use these tools or continue competing against them. And your answer may determine your financial future for decades to come.